Hello, everyone. Welcome to the stock specific class here for Thursday, June the 2nd. Today's class is going to be it's kind of a short class. What I thought was allergies last Tuesday ended up being a full-blown cold. I actually lost my voice yesterday. I've got it back a little bit today. I just don't know how long it'll last, and so I'm going to keep the class pretty short. However, there's also another twist. I've got to pause the class in about 10 minutes. I need to pause it for about 5 minutes. So just be aware of that. Hopefully everyone's come in at that time, and so nobody logs in and is wondering why it's silent. But I've got to pause it for about 5 minutes, and then we'll proceed from there. So it's going to be a weird day today, but at least we'll have a class, and I can kind of update you on some of the things that I'm seeing. Because we have a little bit of a reversal from what I was talking about on Tuesday, and so we'll need to address that. Before I get started, though, any questions you have during the week or any questions you have that I don't get to in class today, make sure you send those to jerry@traderspro.com. And I'll be happy to answer those for you. Let's go ahead and get started, though, with the direction alerts. Not much has really changed as far as the direction alerts are concerned from what we talked about on Tuesday. We are at the far left side of the bear market indicator, but remember, as I said last Tuesday, you can stay at these extremes for quite a while. Remember how long we're at the far right side of this bull market indicator, and how long it took to move off of that when the market started to sell off. We could be in the opposite condition here, where we still have further to drop, but we're going to remain at the far left side of this indicator. We're dealing with some pretty extreme conditions in the markets right now. We had an extreme bull market that lasted for a couple of years, unusual in how strong and how long how steep it rose. And we could be seeing the opposite effect here, where we have, maybe some further downside. Although in the near term, with a little bit of the bullish reversal we had today, we might see the markets attempt to rally a little bit. We need to pay attention to that key resistance level. I'll go over that again today to make sure we're aware of it. But as far as the other indicators, we're right in the middle. Momentum's right in the middle. Again, this can mean we're not extremely overbought or extremely oversold. We could go either way, and that's all these indicators are really trying to point to, are extremes. That's really what we want to pay attention to, is when we're getting to these extremes. When we're right in the middle, they're really not telling us more than what we already know. We'll focus a little bit more on what the actual charts are showing us. Breadth, same thing. Sentiment still relatively high. Like on Tuesday, the buy-sell ratios we saw, mostly a lot of sales going to holds. Now we're starting to see a few more buys or holds going to buys right here, as you're seeing the buy indicator start to move up. We'll see if that can continue here. It should continue if the market can break out of this resistance area, but we'll see how that goes. Let's go ahead and move to the charts here real quick. Get started on those. And you can see that what we were looking at on Tuesday was this kind of bearish inside day. Now, again, as I emphasize over and over, these candlestick formations are very short-term in nature by themselves. You can use them with the trend to draw longer-term conclusions to some of the price action you see on them, but you always want to remember that they're very, very short-term. So a bearish inside day would indicate that you should drop the next day or should open lower the next day. Now, we didn't open lower, but we did drop. We did come down to these lows right here the next day, yesterday. But you can see today we've kind of reversed that. We opened about where we closed. We started to sell off a little bit early, and then we roared right back. Now, when you look at this as a whole, though, and this gets back to something I tell you over and over, and these are little clues that you gotta pay attention to. Whenever you see a stock moving sideways, you need to look at the direction it was moving in before it moved sideways, and that's the direction it's more likely to move in after it's done moving sideways. Now, a couple key words there, I always have to emphasize this, is after it's done moving sideways, we could move sideways for another 2 weeks before it finally continues to move in that direction. The other important words is more likely to continue in that direction. It doesn't have to continue in that upward direction after it's done moving sideways, but it does it enough times where we expect it to, and we're better off expecting it to, and then, I mean, that's the higher probability move, and that's what we deal with in trading, is we deal with probabilities. We don't deal with absolutes. They don't happen. And a lot of these chart patterns that I point out to you, is even though I may be confident in them, you'll hear me many times say, I'll always point out that there's always a possibility you get the lower probability move. It is possible that suddenly the markets fall apart and this thing just comes straight down. And if it does, we'll react accordingly. But the way it's acting right now, it's acting like it wants to continue to move higher, and that's kind of changed from Tuesday. Tuesday, it looked like it could pull back, and we were still looking at this as a possible bearish ABC pattern right here, and it's still possible this could still be the C wave of a bearish ABC pattern. But in the very near term, this is showing that it should go higher. Now, it could just be one day where it moves higher and then it reverses. We could get maybe a gap up and then a reversal where it closes lower than where it opens, and that could be it. It did move higher, but now it's showing a bearish reversal, and we could be looking or expecting it to drop at that point. So very possible we could get some whipsawing conditions, and we have seen a lot of whipsawing conditions, so it shouldn't be a surprise. You're always going to get whipsawing conditions when the market is uncertain, when traders aren't real confident in which way things are likely to go, and that's where we're at. You listen to or read some of the financial websites or financial channels, you're not seeing a lot of confidence in one particular direction. You're seeing a lot of people come on and say, here's my reasons why the market's done going down, it's going to go up from here. Another person comes on, here's my reasons that the market isn't done correcting, we're going to go lower here. And we're seeing that kind of play out in this back and forth that will often take place when the market is indecisive. So a key thing is just recognizing what that is. It's indecision. And, we don't want to draw strong trend conclusions when a market is acting indecisive. Remember, our job is not to try to predict what the market's going to do. Our job is to follow what those professional traders are doing. And I've said this over and over, that if we do rally up from here and continue to rally up from here, no matter how much I believe that the market needs to go lower before we bottomed, you've got to trade what is actually going on at that time, and we would start to add new positions if we start to break out of these key levels. Now, what key level am I talking about? Well, again, emphasize this over and over. We've got this little range right in through here, and you can see the last few days we bounced back and forth between this range. We're right inside this. We have this up day right here, right inside that range. This down day was contained within that range, and today we're looking like we'll close right at the resistance of this range. So we haven't shown anything yet up or down out of this range. We know it's significant, but like I said, with the way it's acting, moving sideways right here and holding up pretty well, I would anticipate that it's going to break out higher. And again, it could just be a real quick breakout move, and then reverse. We'll see. Back in here, we dropped below that key level, and then had a really strong up day right here where it looked like things were going to take off, and then immediately it reversed, and we had this bigger downward move. So we could see something similar to that on a breakout. As you can tell, I'm not going to fully trust the initial breakout. But like I said, if we continue to move higher, there's a pretty decent resistance area right in through here. If we get above that 426, 427 area, we've got to respect the fact that maybe either this is a bigger uptrend that we're in, or it's going to be very similar to what we saw in March, where it looks like it's going to move up and then suddenly reverses. But like I said, we'd look for any of those bearish reversals and act accordingly if we saw some of those bearish reversals. So that's something that we'll watch out for. But that's kind of what I'm seeing right now on that particular chart. All right, like I said, I've got to pause here for about 5 minutes. So I'll probably get back on at about, I'd say maybe 17 after the top of the hour here, somewhere around. So basically right at 5 minutes here, I should be right back on. So again, I apologize, but I got to pause real brief here, and I'll be dialed back on here in just a second. Thanks for your patience. All right, I'm back. Can everyone hear me okay? Just want to make sure I'm not on mute for any reason before I get started. I've done that before where I talked for about 15 or 20 minutes and then realized I was on mute. So if someone could just let me know if you can hear me, and I'll go ahead and get started. The rest of the update here. Can everyone hear me okay? Okay, good. Thank you. I appreciate you letting me know. All right. All right, let's continue here. Again, the other indexes are pretty much the same. Although one thing I did want to point out, because it's something I pointed out on Tuesday, is the Russell 2000 chart. Actually, we did move up into that area. Was it? Maybe it was a Nasdaq chart. Let me look. Oh yeah, it was a Nasdaq chart. So the QQQ chart, you can see its resistance area is up here a little bit further. So it might be that we're just going to rally up to this point up here, and then maybe we get some sort of bearish reversal. So that's another thing to kind of keep an eye on. Maybe the markets are just waiting for all the indexes to reach that key level first, or if we break out on all these levels, on all the indexes, that's significant as well. So that's something to look for in the next few days as well. It was difficult last Tuesday. Remember, it's always difficult when you're at the end of the month, and because there can be rebalancing that's going on and stuff that doesn't really have to do with the future, but has to do with just the here and now, and so it can show up in the price action of the candles, and that's why you want to be careful not to draw strong conclusions to what you're seeing on the end of the month, or like an option expiration Friday or something like that. You want to be careful not to get too confident in what you're seeing on those days, because it could be a false reading that you're seeing there. So but that's another thing we'll keep an eye on there. As we move on, the bonds are they started to move down. You know, they've been moving a little bit sideways since that moved down, but overall it's still looking like it wants to go lower. Still expecting that from the bond market. Gold moved up higher. We looked at that as a possibility that this is a bullish ABC pattern, and it looks like gold's making a move higher here. Will it continue, or is this just a wave A, wave B, wave C before going lower? Either way, it should move up a little bit further in the near term. You know, one thing you see me do a lot is, if it is a wave C will tend to be about the same length as wave A, so you might get a move up into this 177 area. That would be a confluence of where wave C would be about the same length as wave A. If that is the case, again, we don't know for sure if that's a bearish ABC pattern, but if that is the case, that would be a target area. And then you've got a lot of support, resistance in this area right here, from back here. So that would be kind of a target that I'd be looking for if I were trading gold, which I don't really recommend right now, but that could be where it's headed here in the near term. Oil had a little bit of a bearish look on Tuesday, bearish reversal candle on Tuesday, and there was some of the news that was coming out that the Saudis were going to increase supply to make up for the Russian oil that's coming off the market, and caused oil to come down a little bit, but it still looked like it's reversing back up. And you know, it'll be interesting to see what takes place there. Does it continue to move higher from here? You know, it may just be that the market's waiting until it actually sees that supply and what that supply is how much of that supply is coming on. Sometimes you'll see this happen in the markets where you'll get news events that are, it's like a stock buyback. A company might say they're going to buy back their stock, which would be very bullish for the stock, right? For the company to be buying it back, because that puts more buying pressure on the stock. But if they don't give any more details than that, like when they're going to buy it back or how much they're going to buy back, then it really is meaningless, because it's saying, well, we plan to buy back our stock, but we might not. Things could change, and so sometimes, people. In other words, what will happen is they'll throw out headlines to try to get the headline to spark the activity. Meaning, a company might want to boost their stock, and to boost their stock, they're going to throw out there they're going to buy back their stock, even though they're not planning on buying it back. They're hoping that people will go buy their stock because they're planning on buying back their stock, and then that will kind of keep their stock price up or bolster their stock price without them having to go in and buy it back. So sometimes you'll get an immediate reaction to some of these news items, but then the professionals at least might wait until they see actual action. Do they actually see more oil coming online? Do you see it in the numbers, see it in the reports that they look at? And by the way, that's the nice thing about being a trend trader, is that you don't have to know what they're looking at or what reports they're analyzing. Just let them analyze them, and if they think it's bullish, they'll buy. If they think it's bearish, they'll sell. But we'll have to keep an eye on how the chart looks. Today it looks like it's reversing that initial bearish reaction. But again, this is where you have to be flexible again. Again, you get a bearish. That's a pretty strong bearish reversal candle. There's some pretty decent volume on that on Tuesday. You would have expected it to pull back from that. It really didn't pull back. It really, all it did was close basically at the close of Tuesday yesterday. But then it's gone right back up today. So you got to be able to recognize that and say, okay, it's shaken off that bearish reversal. Now it's looking more bullish. I need a flip-flop, and I need to be more bullish on oil at this point. Now, again, if it throws another bearish reversal candle in, you flip-flop again, you go bearish again. But you can't get too locked in on your expectations. You could feel like oil's going to drop, and it's getting ready to drop, and but if you get a day like today and it's telling you, at least not in the near term, it's not showing you that it's going to drop, at least not yet. And so you got to be able to recognize that and factor that into whatever decision you're making. I'm not saying you don't stay in some of your trades or whatever, but you at least factor that into whatever your decision is on your trade. For me, and I've got oil stocks in the portfolio, I'm gonna hang on to them. I don't see the reason to panic and jump out of them right here. At least not yet. I'm not seeing any significant drop in oil from this standpoint. The dollar, we saw a little bit of a bounce in the dollar yesterday, but we're right back down today. Now, I talked about this on Tuesday. I said we got a little bit of a sideways range right here. You might, just like in an upward move where you get that real sideways move, sometimes you'll get a dip down before it takes off. That dip down kind of attracts the buyers to jump back in. Kind of the opposite might have happened here, where it had a strong up day, and that gave the dollar short sellers a chance to jump in. Maybe they thought that was a good time to short the dollar again, and it's causing it to come back down. Overall, it's still acting like it wants to go lower, so we're going to assume it's going to continue to move down from this area here. We'll see if that continues. It could still be in a sideways range, though. We haven't broken below the support area here, but it's not uncommon to see that, where it breaks out of the upward range and then suddenly reverses right back down again. We'll see if that plays out with the dollar here in the next week or so. We'll know a little bit more on Tuesday when we have the next market update. VIX, it looked like this is actually a little bit more of a bullish candle down here yesterday, where it rallied up a little bit early on, then faded a little bit. But again, when you see this type of candle at the bottom of a move, it's not the strongest reversal candle, but it's an indication of selling exhaustion. but again, it shook it off, and we're going lower today. So you have to recognize that it basically shook off that candle. Now, sometimes these candles can show up ahead of time, meaning you see a little bit of seller exhaustion, you go down a little bit further, and then it spikes, meaning it was warning you that there was some selling exhaustion there. It was just early. It still managed to go a little bit lower, but and that's with all these candles. Any of these reversal candles, they may appear like they're not working, but they're actually just showing you an early indication that. Well, look at this for example. So on a day like this is just the VIX, but let's assume this was a stock right here, bearish reversal candle right here. Next day it opened higher, and would appear that it was shaking that off and going higher. Ended up closing down, tried to hold on a little bit right here, and then there was the collapse. Sometimes you'll get that. It'll be a little bit of an early signal there, and that's why I'm saying, let's see what happens over the next day or two. If we break out right here, do we suddenly get a bearish reversal candle right after this that could indicate the market's getting ready to drop? Again, the market should move opposite of the VIX, so we'd be looking for any sort of bullish reversal on the VIX, which I don't see yet. But that would be something that I would keep an eye on. And remember, I also say that the VIX isn't telling you something every day. So if you're assuming it's telling you something significant every day, it's just not. And really, it's not telling us anything significant today. Anything that it's just telling us what we already know, which is the market. The S&P is up and the VIX is down. I don't see any major any other major conclusion to draw from that. So we're just going to move on here. So chip stocks, again, the chip stocks are shook off a little bit of that bearish move. They are moving higher, starting to break out a little bit here. They tend to be a little bit of a leading indicator of the indexes, or particularly the Nasdaq 100. We'll see if that continues to be the case here. Transports, let's check those. Again, those look like they're following what the rest of the market is doing. Bitcoin's just kind of been just flat right here. Had that little bit of a move up on Tuesday, came right back down, a little bit up today, but overall it's still in kind of a sideways range. All right. As far as the portfolio is concerned, I got out of the SARK, S-A-R-K, this morning when it looked like we weren't dropping. We had that kind of bullish reversal. You pull that up, you can see it here. Bullish reversal in the market, bearish reversal here. So we got down a little bit at the open and then continued to move lower. I think I got out around 62 something or something like that when it looked like it was kind of rolling over a little bit. Well, we'll continue to use that as a hedge if it looks, and it still looks to me like it's in kind of this bullish ABC pattern right here. If it gives me another bullish reversal candle, I'll jump back in. But the other stocks look pretty good. And OC, although it's down, again, overall, it's kind of still right at this breakout area that we talked about on Tuesday. Come off the lows of the day right here. My stop, I think, is down below here, so we're still down. I'm not worried about it stopping out just yet. In fact, it looks like it's getting ready to break out. So that one still looks good. No reason to do anything with that one. Oil, again, USO still looks okay and still hanging on to that. CEIX broke out today. This is a coal trade. Broke out. That one still looks good. CF had a little bit of a bullish reversal candle today. Chevron, again, another oil stock, still looks okay. ADM had a pretty ugly candle yesterday, but again, a bullish reversal candle today. We'll see if that holds. If it can move higher, you've got to you put in a higher low right here, so that's a good sign as far as basic. You already had a higher high right here. Basic trend analysis, higher high, higher low. It goes to another higher high. That's a good sign. We'll see if that takes place here over the next few days. But again, no reason to. Again, my stop is down below here, so no reason to get out. I was willing to risk that if it were, if it were to get down to this level. And that's about it. Can't take a look to see if there's any. I was looking at this SIMO. Had a nice little move today. Now it hasn't gone back to a buy signal yet, but it's real close. But that looks like one that can rally a little bit. It has rallied with the market dropping. It's rallied pretty good. That one's held up pretty good. That could be one that you could consider either as a getting in on a nice bullish candle today, or waiting for the buy signal. That's a stock that I would consider. Again, assuming that the market continues to break out and go higher. We looked at this go-go. It already had a buy signal. We were looking at this earlier. Now, the way you could manage this is if you were considering a trade. This is probably the area where I know I was wrong. We were looking at this as kind of that bowl-shaped move, kind of working its way back up. So this would be the area where I know I'm probably wrong. You could enter in this area, put a stop down below here. If you wanted to get in, you could wait for a little bit. It's not as strong a candle today. It did drop a little bit right here, so you can wait for it to, maybe get back above here or something to give you a little bit more confirmation. Again, this is the thing when it comes to confirmation. I get these questions all the time. How do I decide when to pull the trigger and get in? The bottom line is there's no perfect way to make that decision. It's all about how much confirmation you're looking for, how much risk you're willing to take. The more confirmation you look for, the more you give up, the more, let me kind of illustrate this here. And I've talked about this before as it relates to, do you wait for the buy signal or do you just get in on a bullish candle? If you have an ABC pattern, I could get in on a down day, right, at what I think is the bottom of an ABC pattern, assuming that I'm very close to it going back up, okay? Well, what's the risk of that? Well, the risk of it is that it's not ready to go back up yet, and it continues to go down, or that it's not even a bullish ABC pattern, that ends up being just a full-blown downtrend. But as long as I have a stop loss, maybe I get in aggressively right there and I put a stop wherever I put it. Let's say I put it down here somewhere. Then if it does come down, stop me out. Okay, I was willing to take an aggressive entry. It didn't pay off. I got stopped out. But at least that was my understanding. I knew what I was getting into. I knew I was taking on a risk or having a riskier entry, taking more of a chance. If I would have been right and it would have gone up right away, I would have gotten all of that move. So the benefit would have been I've gotten all of this move, and it would have been worth that aggressive entry. Now, the other thing you could do is you could wait for just a little bit of confirmation, wait for it to have what looked like an ABC pattern. And then at least after having some down days, at least have some sort of bullish reversal candle, a nice big up day or something like that. Now, the benefit of that is I could get in on that up day and I could put a stop right below that previous low. I'm not risking very much. And I've got a little bit of confirmation. But The downside is I gave up maybe $1 or $2 of the move to get that confirmation. It wasn't free. That confirmation wasn't free, but I'm willing to give that up to get that a little bit more confidence that it's starting to move up. I mean, now this has got a higher probability of going up from this point than the other trade because it's actually stopped going down and started to move up. And so I recognize that, okay, I've given up maybe a $1 or $2 move to get that confirmation, but to me, it would be worth it to get that stronger probability that it's going to go up at that point. And the third option, or you have to be 4 or 5 different options here, but the next option is you can wait for even more confirmation. Maybe you wait till it goes to a buy signal. Now, maybe that's up here a little bit later on the move where it finally goes to a buy signal. Maybe you put your stop down below here, and you might have given up $3 or $4 of the move to get that additional confirmation. But now that it's gone to a buy signal, maybe it's a lot more likely that it's going to break out and go higher at that point. Your trend is reversing into an uptrend, looking more like an uptrend based on the algorithm. It's showing a lot more bullish characteristics. But again, it comes at a cost. You're paying for that additional confirmation. So a lot of it comes down to your risk tolerance and how much confirmation you need. I deal with traders that need very little confirmation. They don't want to give up much of the move to get going on it. You know, they believe that stock is going to turn around and go up. They don't want to wait much longer. They're willing to risk that it keeps going down to get in, try very near that bottom. I have others and they'd want to wait till it breaks out to really know for sure that it's in that uptrend. And that's just the way they like to do things. So to say there's a perfect way to do it, there isn't. The key is knowing what you're doing and being aware of the fact that if you're waiting for extra confirmation, that it's a cost. It's not. It is affecting your trade the more confirmation you're looking for. So it's just being aware of that balance. Let's see if there's anything else here. My voice is starting to crap out on me a little bit here. So let's look at Coca-Cola here. Coca-Cola is looking a little bit interesting, but could be forming a little bit of an inverse head and shoulders pattern, but it would probably need a little bit more confirmation. I want to come up a little bit here. Anyway, I hope that helps a little bit. Like I said, I know it's not the best class today, but it was either try to suck it up and get through it a little bit and give you some analysis, or have you go the rest of the week without any updates. So I thought that I'd help you out, especially since, like I said, it looked like things were looking a little bit more bullish today, and we can double check that again here before we close. And I wanted to make sure you were kind of aware of that in case you were looking at some bullish opportunities. Yeah, it's still holding pretty strong right there. Let's look at the Nasdaq here real quick too. Yeah, both are right at the highs of the day. Russell 2000. It just is a matter of does it break that key area, which it may not do today. I mean, if it does, it's something to pay attention to. If it doesn't today, but it'll put tomorrow's market action or make tomorrow's market action a bit more significant if it can break out above here. So if you're not quite sure where that resistance area is, just really focus on the highs of the last few days right here. So that's showing you right there where we just had trouble breaking out above that. Look at every day we've hit that area. Whenever you see that anywhere, you know, it's significant. By the way, I was going to show you back here where again it was bumping along this little resistance area right here, broke up out above it, and immediately reversed off of that, came back down off of that. A little bit different circumstance here as it was dropping ahead of that or going into that, but whenever you see these tight ranges, you want to pay attention to them. The highs right up here, the lows down here. Again, you can see that from this day, the low of that day. Yesterday it didn't test it, but I mean Tuesday it didn't test it. Yesterday it tested it. Today it tested it, and then the high. So a breakout above here is significant. I'd say a breakdown below here would be pretty significant. So that's definitely something to pay attention to. All right, we're going to wrap things up. I should be better on Tuesday and sound a little bit better and maybe have a little bit more energy in my class, which is important because I can put a lot of you to sleep if I talk this way for the whole hour. All right, have a great weekend, everyone. Bye now.